Hi everyone, welcome to my class today on IFRS 16, International Financial Reporting Standard on lease. This is the new standard on lease that it was issued to replace the old IAH 17. In case you are coming across my video for the first time, you are a first timer, kindly press the red button and subscribe so that you can have access to our next uploads when we upload some videos. Now, in today's class, let's quickly look at list in brief. Of course, I understand that the ICANN exam is fast approaching and ACCA. So this could be a saving grace, yes, for few of you or all of you if you are adding list as a standard. Now, what is lease? A lease is a contract or part of a contract that conveys the right to use an asset for a period of time in exchange for consideration. Now, here you are saying that a lease is a contract or part of a contract, that conveys, that transfers, the right to use an asset for a period of time in exchange for consideration. There are some keywords there that should be explained. One is a contract. When we say contract, for there to be a contract, it must be between two or more. Now, contract in this context is between the lessee and the lessor. The lessor is the owner of the asset. The lessee is the one that wants to borrow the asset, or lease the asset. Now, the lessor now can be defined in proper as an entity that conveys the right to use an asset for a period of time for consideration. That is, the lessor is the person that transfers the right to use an asset to another person known as the lessee out there. So the lessee now is also an entity that obtains the right to use an asset for a period of time in exchange for consideration transfer. So these are the two basic parties to any lease agreement, the lessor and the lessee out there. Now, what is the main feature now, or let's say what are the basic features of lease? Basic elements of any lease. That is, for there to be a lease, please, for there to be a lease, certain items or certain elements or certain features or certain things must be contained in that contract. One, there must be an identified asset out there. There must be an identified asset. There must be an asset which is the subject matter of that lease agreement or contract out there. Two, there must be a right of use. Yes, the contract must contain the right of use. That is, there must be a right to make use of the asset. Number three, there must be consideration out there. There must be consideration. Consideration is the money you pay to the owner of the asset out there. Four, there must be a lease term. Lease term. The lease term is the period or the duration that the lease agreement covers. The lease term is the period or duration that the lease agreement covers. So these are the basic elements or features of lease. Please take note. Now, IFRS 16 was introduced on 1st January 2017, but it became effective on 1st January 2019. So since that time to now, IFRS 16 has been the standard on lease transactions out there. Now, IFRS 16 replaced the old IAS 17, and this standard comes with a unique feature. What is the main feature? What is the distinction between the old IAS 17 and IFRS 16? Now, IFRS 16, okay, comes with a single accounting model, with a single accounting model, with a single accounting model. That is, under the IFRS 16, the lessee is permitted, the lessee, is required, to recognize lease liability and lease assets for any lease that is above 12 months. That is, in any lease transaction that is above 12 months, you are required as a lessee to recognize lease liability and the lease asset in your financial statement. Now, that is that now. Next, how does a lessee account for lease in its books? How does a lessee account for lease in its books? According to the IFRS 16, the lessee should account for all lease that is above 12 months in his books by showing the lease liability and the lease asset. The lease liability and the lease asset. And how is the lease liability and the lease asset value determined? So that now takes us to lease measurement. Lease measurement. Just like our IAS 16 on PPE, it's the same thing. Here we have initial measurement and subsequent measurement. Out there. Initial measurement and subsequent what? Measurement. Out there. Now, under initial measurement, out there. Here we are saying for the very first time, how is the lease liability determined and the lease asset determined? The value of the lease asset. Now, according to IFRS 16, the lease liability is the present value of the unpaid lease amount. The present value of unpaid lease amount. That is everything the lessee has to pay under the lease in the future, that has not paid now in the future. So you find the present value, by what? Using the implicit interest rate in the list. You calculate everything, that the lessee will pay under the list, the minimum list payment, and find the present value. You discount it to what? To present value that was using the what? The implicit interest rate. However, if this rate is not determinable, then use what? The lessee incremental borrowing rate out there. So that is that now. Now, for us to find the present value of the unpaid lease amount. Now, what is the makeup or what are the cash flows, that constitute the lease liability that the lessee will pay in the future? Out there. Here we have lease liability. Out there. We have fees payment. The fees payment, aware. The fees payment, okay, is the total installment that the lessee will pay in the future. The total installment that the lessee will pay in the future plus plus option fee. Option fee. What is option fee? This is the money that the lessee will pay to the lessor if the lessee will take over the asset, okay, at the end of the lease term. For instance, an asset that has like let's say 10 years, okay, 10 years. I have what leased for 8 years. So it's having what 2 years remaining at the life. So now if I decide, okay, to take over the asset after the lease term, the money I pay is called option fee to the lessor. You put that too. You also add guarantee residual value. The amount that the lessee would guarantee the lessor, okay, as the value of the asset at the end of the lease term, plus termination penalties. That is, if the lessee decides to terminate the lease agreement before the end of the lease term, it must compensate the lessor by paying these penalties. So the sum of this, okay, is the cash flows that constitute the lease liability to be paid in the future. So this is what we discount now to present value to give you the value of lease liability. Aware. So this is what the present value of our lease liability. Aware. We are still on what initial measurement. Now, what will be the value of the right of use asset now? The right of use, the right of use asset, the value to on initial measurement. Okay, so normally the PV of the lease liability should be the value of the right of use asset. So you say present value of the lease liability. Now, this should be the value of the right of use asset. However, there are certain things that we must still add to the right of use asset to get the total value of the right of use asset. Say plus advance payment. Okay, that is the lessee initial deposit. You also add to it too. Plus indirect cost incurred by the lessee. That is all the costs that the lessee also incur to set up the lease must be added. Plus estimate of dismantling the asset. You also add it. Under IAS 16, remember, okay, it is for part of the cost element. If there is a clause that, at the end of the year, okay, you must restore the site back where you put the asset, then you must find the value, the present value, and add to the right of this asset. Then minus incentive received by lessee. You less. Are we there? So this is what the capitalized value of the right of use what asset. This is the value of your R of the least R set now as initial measurement. Exactly. So that is that now. Secondly, subsequent measurement. How then? Just like IFRS 16P, of course, we are dealing with assets. Now, what how do you measure or how do you measure your lease liability and the right of use asset subsequently? According to IFRS 16, okay, the lease liability should be measured subsequently at amortized cost of IFRS 9 using amortized cost method of IFRS 9. Okay. What is amortized cost method? Okay, is the method that allows us to spread the total lease liability, okay, over the lease term. The method that allows us to spread the total lease liability with the interest over the lease term. Okay. So to apply this amortized cost, okay, you must do what is called amortized cost schedule. Amortized cost schedule. Exactly. Now, and to do your amortized cost schedule, you must understand two things. Number one, when do you make your annual installment? Is it at the end of the year? If it is at the end of the year, it is in arrears. Are we there? That is, you are paying your annual installment after you have used the asset, or at the beginning of the year, which is advance. It means you are making your annual installment before the use of the asset. So you must understand these 2 points, okay, to draft your amortized cost schedule. Is your installment paid in arrears or in advance? It is very important. Let's see. A, arrears. Arrears, when the installment, okay, is paid in arrears. This at the end of the year. This is how the schedule will look like. You have here balance brought forward paid. Here you have the interest. You have installment. Then you have balance carry forward. However, let's say this is year 201, okay, the first year of the list. Now, what will be your balance forward? It is what the present value of the list liability you have here. However, that will come here as your opening balance for the list here. However, then the interest, the rate you have in the question, you will times it, you will find the percentage of the rate on this list here. Okay, this list balance forward. However, and what you have is what is here. Let's say what your annual installment in the question. How much are you paying annually? 5 million, 5 million, or 10 million, or 10 million. However, so the sum of these two minus this give us what? The closing balance. The closing balance here will serve as the opening balance for the second year. This is now what? Your outstanding lease liability. You still apply the same rate on this. Is that correct? To get your interest for second year. Pay your annual installment. Take note, your annual installment is the same all through. You have this. Okay. Third year too is also coming here. Are we there? So this is the opening balance. Yeah. This is what your outstanding lease liability, because you are charging interest based on the outstanding lease liability. So you apply the rate you have here to here, you have the interest for this year too, okay? Then pay your installment, this for this, and on this you have again this. This is what how the amortized cost schedule will look like when your installment is paid in years. Are we there? In years. So let's see now.